Thanks for joining us for Closing Markets. Chip Nellinger with Blue Reef Agri Marketing is joining us in kind of a mixed close in both grain and livestock futures trade. Let's talk about grains first of all, Chip. Wheat market was kind of the upside leader, and some of that had to be this big reverse that we saw in the dollar today.
Yeah, that the outside markets were definitely something that I think were overall very helpful for our grain markets today. Big reversal lower in the dollar. Of course, we were way overbought in the dollar, but had some government intervention in Great Britain with some of their financial markets, and that seemed to stabilize things and reverse the dollar for lower. And obviously, the wheat market has had its own fundamental, push higher here recently with some questions about the ongoing export corridor. The funds are net short. And I think more than anything, it's technical. The funds just built up a fairly large short position here over the last couple of months. We kind of digested all the bearish news, and now the news seems to be coming in on the bullish side, as well as that reversal in the dollar. And you saw a really strong day in the wheat market, which was very impressive. Given the corn and beans just kind of sat there, wheat definitely was the upside leader today. You don't oftentimes you get to say that here in the last few weeks.
Of course, corn and soybeans, as you point out, try to follow wheat, but the upside is limited when you're in the middle of harvest here, right?
Yeah, it is. And we're seeing some river basis due to low river on the Mississippi anyway. We're seeing a push lower in basis. You've got harvest really starting to kind of fire on all cylinders now. Very clear weather window here, it looks like, for most of the Corn Belt. And it's a hard time of year for the market to rally. So given that, I thought it was a fairly impressive day. And really, in the big picture, I thought the corn and the bean market has held together pretty well, given some of the carnage in the outside markets. We've had such a huge push lower in the stock market, a big pressure in crude oil here the last couple of months. You saw interest rates surging higher. And through all that, even at the tail, the start of harvest here, I thought corn and beans really overall have seen some weakness, but have held together pretty well in spite of that.
Yeah, and like you say, crude oil up pretty big today, so that probably helped out corn. And of course, interestingly enough, soybean oil, I think, was lower, which usually follows crude oil. But I think that was a palm oil play today, wasn't it? That was down so hard.
Yeah, we're, really kind of flipped the switch as far as palm oil goes. It was such an upside leader a year and a half ago with some production problems in Asia. And now you've kind of reversed that trend. And I think the production has been better. And so palm oil, again, was the shining star, leading soy oil higher a year ago. And now it's kind of been a headwind as far as the soy oil market goes, with increasing production there in Southeast Asia.
Now we go into Friday. We have quarterly stocks and we have the small grain summary. What do you think? And we'll see there.
Yeah, it's always a wild card. We're going to get the final old crop ending stocks. My head tells me, as strong as basis is here at the beginning of harvest, that maybe we could see some surprises and have these, at least corn and bean stocks, be a little bit tighter than expected. But it's really a wild card. Hard to gauge these reports. A lot of information there. And I think more importantly, once we get that out of the way, then the market's going to look ahead to the October 12th report. That might be more important than this quarterly stocks report, but it's a real wild card. We've seen big surprises in years past, not only on regular stocks reports, but on this September stocks report for sure. And so the market's going to probably hold its breath a little bit going into this report to make sure there's no big major surprises in it.
Cattle market down today, and we've had big chart reversals that were scored last week. And it seems like the market now is not only seeing recessionary fears, but just the funds are getting the heck out, aren't they?
Seems like it. You look at the action here recently in the hog market has been just brutal. Funds have a pretty big long position built up in cattle, and even in spite of the stock market reversing higher, crude oil up, $3 or better, and the reversal lower in the dollar. Really a disappointing day in the cattle complex, which we couldn't turn around and at least trade higher on the day. Steady cash trade. I know that the December live cattle futures are still a little bit of a premium to where the cash market is, but steady cash trade in higher stock market still couldn't get any higher trade today in the future. So a little bit of a disappointing trade day today.
So do you think we're going to see a lot more downside pressure because we have done some chart damage and the funds are so long, like over 73,000 contracts as of last Tuesday?
Yeah, I think if the outside market stabilize, if it isn't a one-day wonder, and we do see a more pronounced rally in the stock market, and a rally well north of $80 in crude oil, I think that maybe we've kind of seen the worst of the selling pressure in the livestock complex. However, if it is just kind of a minor blip and we resume these major downtrends in equities and crude oil and the energies, then you are susceptible to some additional selling. Could take us another $3-4 lower pretty easily in live cattle. But fingers crossed here. We're so oversold in some of these financial markets, the equities, and so overbought in the dollar. We're due for a correction, and I think that can spill over and at least stabilize our livestock markets in here.
Hog charts don't look any better. In fact, maybe look worse than what the cattle charts look like. And so do we have a lot more downside pressure there? I think we've taken out, what, 13, 14 bucks in the last 6 sessions.
Yeah, it has been brutal. I would say the funds still have some to exit. Even today, you couldn't see much of a bounce there. Tried a couple times, but just can't seem to get it going. I'm afraid that any little bounce you do see will be met with some more selling pressure from the funds. Really brutal. It's hard to tell now that you pushed into new lows in some of these deferreds, and it's really kind of no man's land in here, but a little bit fearful that there's some additional selling pressure in the hogs because they built up such a large long position over the last month and a half, 2 months.
Do you think if we see contraction in the hogs and pigs report tomorrow, that may be enough to turn the market or not?
Could be, and that's always a big report, like the grain stocks reports. It's a wild card, hard to predict these quarterly hogs and pigs reports. But if you do see, I think most people are expecting not much expansion, and that might go a long ways towards giving us some stability and making sure there's not a major bearish surprise in there. But if we're still under a year ago levels, and haven't seen much expansion, that could be enough to kind of stabilize us and maybe not rally us immediately, but at least stop the huge selling pressure we've seen.
Well, thanks for joining us, Chip Nellinger with Blue Reef Agri Marketing.